how it would look like. So
the company's assets grew from 9.8 billion shillings to 15 billion shillings, underpinned by a strong investment income and increased investment activity. The company now targets to grow its assets under management to 30 billion shillings by 2014, after growing it from 6 billion shillings in 2009. In 2010, the company delivered a return of 56%, which has consistently beaten the NSE index over the last 6 years.
The ability to consistently deliver market-beating returns, regardless of what is happening in a specific economy, is very important to us. And we committed that by 2014, we would have at least 50% of our assets under management invested outside Kenya.
The company's increased profitability is attributed to a strong performance across its 3 business lines of private equity business portfolio, predominantly invested in the beverage and financial services sector, whose share of profits grew by 57%, while the real estate investment portfolio recorded a value appreciation of 14% of the amount invested to 3.5 billion shillings. Made up of prime assets in Kenya and Uganda, the quoted private equity business line recorded a return which outperformed the NSE index at least 14%.
Land is a finite resource. Land does not expand, but populations grow, economies grow, standards of living increase. But particularly land in attractive locations is a very, very scarce resource. And by being able to secure land in an attractive location, that's a huge barrier to entry.
At the moment, the company is planning to break ground on phase 1 of its development at its 100-acre land in Runda and at other 300-acre site in the shores of Lake Victoria in Entebbe, Uganda by the end of the current financial year. The company also declared a bonus share issue of 1 for every 10 shares, which is also in line with the company's zero dividend policy.